Hello and welcome to another episode, actually a special episode of the Legal and General Just Covered podcast. Really excited about today. You know, if you've listened to it before or if you haven't, we speak to key stakeholders and advisors and intermediaries in the arena when we're talking to customers and looking at good customer outcomes. For those that you don't know, my name's Wayne.
Hi, and I am Clodagh, and today we have Andrew from Lifetime Advice Bureau and Liz from Chronos Wealth.
Hi.
Amazing.
Hi.
Thanks for coming on. Appreciate it. So, tell us about your story. We often start with a lot of these podcasts where how you got into the industry, how you sort of work together, because I know you do, and we'll delve into that as well, and how your businesses have really become linked over the years.
Shall I start?
Please do.
Okay. I sort of went through the normal university route, got into property really before financial planning. Felt like it was an easy way of making money. Turns out it wasn't. But bought some properties, got into mortgages, got into financial planning, and then I moved offshore for 7 years in the Far East. So I spent some time in Malaysia and then Singapore. Nice. Brought me back to London. I redid all my exams post RDR, then I set up a financial planning business, which really has morphed into more of a lending business, mortgages, specialist lending. And my sort of main focus now is lending in retirement. So that transition of wealth really for clients that are over the age of 55. So lending solutions that primarily started with paying off things like interest-only mortgages, which have now really moved more into legacy planning and IHT discussions and bloodline planning and things like that. So I focus on the lending piece. And then when I got together with Liz, she focuses a bit more on the high net worth or the wealth piece. So I'll let her introduce that side of it.
Yep. So a little bit about my career. After university, I was a graduate at Coutts Bank, which everyone knows is the Queen's Bank. So what a graduate program that was. It was absolutely fantastic. I spent 15 years as a private banker, dealing with all kinds of clients, going through all different situations. So I've seen, people growing businesses and selling businesses. I've seen people acquiring wealth that might be from inheritances, divorces, and I've particularly seen plenty of divorces along the road. 8 years ago, I decided that I really wanted to look after clients my way, and I decided to start my own business. So I have built Chronos Wealth. I'm a senior partner practice of St James's Place, and we really look after high-earning professionals, business owners, people who've come into significant amounts of money, and it's really taking them on the journey of everything they need to sort out financially and sitting alongside them along the way. So yeah, Andy and I guess in recent years, we've both been divorced and met each other through this financial, planning journey. And we've really decided to work together more and more because what we do, I think, really complements each other. And I think that our clients are really kind of enjoying us working together and giving kind of two sides of the story as well from our experiences.
From both being divorced, do you find that it's easier then? Do you sort of give that personal sort of piece? And
I think, like kind of qualifications and they're critical and training and everything, but there's nothing like doing it.
Living through it and knowing
going through
what
the financial crisis, you start realizing what investments are, don't you, and how they react. And I think that's true. With
and
all
I
these
think we've
things.
had different experiences, haven't we? You've had a pretty amicable divorce, and I had a really difficult divorce many years ago. And I think there's nothing like having those experiences and being able to just empathise with clients so much.
Yeah, I think mine was less expensive.
But just that empathy and actually saying, I know how you feel. Yeah. Being through that. And, let's just take a step back and take some time to think about it.
And it helps with that trust piece, doesn't it? Because if you can empathise, you understand it from someone's point of view, you can really, get on the same page as them.
Yeah, I think the thing that I see a bit more in the later life piece is that you've often got older couples that haven't necessarily been through divorce, but their children are going through it.
Yeah.
Okay.
And so a lot of them will come to me and say, like, this was not part of our journey. We spoke to some clients the other day, house valued at sort of 2 million, and the daughter's getting divorced. It's not very pleasant. They need to raise some money. They need to get rid of him. And you're like, right, okay, and the daughter's my age. I'm 42, Liz, similar age. And you're like, okay, so this is my experience. Like, this is what I suggested. And you start pulling in these other people then. So, friends that are lawyers or family lawyers or accountants. And I think you become this person who is about the facilitation of the journey, not just what
and
you
you're
can
seeing the
offer.
impact, aren't you, firsthand on the family, but particularly where it's the older generation that didn't see it coming.
I
I mean,
know.
the emotion
think
on that
so.
must be horrendous.
I think sometimes for your parents, it's as traumatic as for you yourself.
Because they don't want
Because-
it for their loved ones. Sure, they don't.
Absolutely.
They'd rather
You
do
know.
it themselves and go through it than have to watch a daughter or son
Totally, because they
experience it.
feel, I think as a parent, you feel really out of control and you want to be there to help, but you also feel like, what can I do apart from give money? And money's not always the answer, is it?
Yeah, it's emotional
So,
support.
yeah, I think it's really traumatic for the parents as well as the person going through that, and understanding that's been important, I think, when you talk to clients.
Yeah, that is interesting. You talked about being the facilitator with regards to that, to bring certain bits together. I suppose even to bring parties together, as well as the technical piece, which we'll delve into in a little bit more detail.
Yeah, I think, without going to like broad brush on it, the regulator's always kind of been keen on this holistic advice model. You're speaking to clients about a lot of different things. And, personally, I think it's really hard to be a professional at everything, a subject matter expert, everything.
Yeah.
And I think working together, we've really found this, that you can just add so much value around your expertise and then bringing the right people into the right journey at the right time. And I think clients really welcome that. They want to know that they can kind of have a hub for what they want.
Because it's nearly diluting, isn't it, what your skill set is? So everybody knows what their skill set is. You focus on that, and then you refer the next bit on to somebody else, and then you have a really special lens.
We saw this a bit yesterday in a really complicated case that we're looking at, but I think also clients don't want to tell the same story. It's traumatic, it's emotional. I think it takes a lot out of them. So you can take those bite-sized pieces away and find that solution. And it might just be a simple will.
Because I was thinking about our claims process. With our claims, they come through to one claims assessor, so they're only telling the story once. They don't have to repeat it because that's so emotional. I remember when I got divorced, and every time you met someone, then you had to repeat it, and it wears you down. Plus, you might be having those conversations in front of children or your parents, and then you can feel the impact.
You're living it every time you talk.
Every
aren't
time
you?
you speak about it. Yeah.
I always say, I feel like my role is to be that kind of third party, that trusted friend.
Yeah.
And to very much sit alongside my clients. So, in a business, you have like a board of people, don't you? You have your FD and you have your legal advisor. And I'm kind of there facilitating all those people. So my job is to give that information to somebody who's writing the will. Because they don't want to go in and give the national insurance number again and do this, because there's so many things they have to do.
Yeah.
And so our job in my team is to facilitate, to make it as easy as possible for the other professionals to help my client as well, because it's exhausting. It's really mentally exhausting going through these.
You see it, don't you? Like yesterday, we spoke to a bank and they could do this piece of it, but then we were worried about this piece of it. And there's like landmines everywhere. And you're a bit like, look, let's just kind of stop. Like, there's a big kind of journey in front of us, a lot of open road. The things that are bothering you the most, and in these client scenarios, was just where to put this money that suddenly they were going to come into. And you wouldn't think that necessarily. So, like, well, it can be housed in a banking institution. And they were like, it's
Do you
too
find that
much
there's
money.
always a solution? I'm just thinking for advisors that maybe don't dabble in your world, maybe the mortgage and protection advisors. Is there always a solution for customers?
I think a lot of the time it's really understanding what people want. We're probably jumping ahead a bit with this, but I think so seldom is it that you let a client finish their story and their journey and unpick what's driving them.
Yeah.
So like another example for a client I referred to Liz recently was a Singaporean lady, and I've gotten really well with her because I've lived there, and she wants to go back to Singapore and she thinks that's going to eradicate her whole IHT position. And I'm like, I don't think that's necessarily true.
Right.
Your shadow follows you a bit further than your footprints do. And you spoke to her and she doesn't even want to go back to Singapore, really. But
It's really delving down into someone's actual...
why?
Yeah.
Why?
Yeah.
Because so many people, and I think this, when we discuss about some of the things that people get wrong in divorce, it's you get really hyper-focused on one thing. So you get really hyper-focused on, I need the family home, or I need to go and live here, or I need to go, and you can't get yourself out of that. And you need to look at the big picture. So my job is very much to take people a step back and to say, let's just look at everything again from a top-down approach and like a bottom-up approach of the detail, not just hyper-focus on one thing.
Because that's what's important to them. They don't know everything else.
And they've kind of thought that's a solution.
Yes.
And I always call it, especially with men, I say, what's the chat down the pub?
Yeah.
There's always the chat down the pub of, the electricians, the inheritance tax advisor. It's always the
advisors and protection advisors are all.
You know what I mean? It's always, they say, well, I have to do this and I have to put my house in a trust. And I was like, okay, let's just take a step back. Why are you putting a house in a trust? So people get this one idea and then they go off.
They've got hold of a solution, haven't they? Before they've started. And it's probably because of that. Firstly, they're vulnerable, aren't they? So they don't know what's going on. They're feeling there's a process and awareness imbalance, which you're helping with, aren't you? You're facilitating, as you already said, to bring different people in. And then also one person, whoever it might be, has said, oh, you've got to do this. And straight away, because of that and that, they jump on it, don't they, I suppose? And you're, I mean, it must be huge. I suppose the joy, great feeling that you get out of helping them to take a step back and think, okay, put your foot on the ball, whatever you want to call it, and look at the full picture.
And I think for me, I've gone through some of my own traumatic stages with divorce and, dealing with my children as well. I think the child part, we're talking about the financials of divorce, but the emotional part is often your children. And so when you've gone through all those things, I know how it feels to sit in that chair. And that's why I really love what I do, because I feel like I can add so much value on the emotional and behavioural side. Not necessarily on the solution side. Of course I do that. That's not what drives me. I say a lot of this is a bit of an art.
Yeah. And it's signposting too, because we were chatting about this when, we can tell people how to set the policies up properly to make sure maintenance is protected and all this and everything in trust. But then it's the well-being for the children. So it's interesting that if you have recommended a policy, do we signpost the well-being support services? There's mental health support for children, because depending on what age their parents, it's mind-blowing. They don't understand. They can't comprehend why mum and daddy are splitting up.
No,
so I think as advisors and professionals, we have to signpost that there are other things available.
We I did an article last year in an intermediary magazine, and it was kind of getting older should get easier. It felt like that was what the path was. It used to be that you would work in a job, maybe a job for life or a career, then you would get a pension, it would pay you an income, and you would drift off into this journey of fulfillment.
Into the sunset.
and this article I wrote was like, it's never been harder to get older and retire, because the complexity of financial decisions, emotions, living longer but in poorer health, and all these things kind of come into that journey. And I mean, even as practitioners and as professionals, like the pillow talk is not that exciting for us. But I talked about this whole of life case at 6:15 in the morning on Saturday. I'm like, what do you think about this? But we even don't have answers sometimes for where that path might go. People are now saying, well, I might go and live offshore for a period of time. I might want to consider what my tax status is. And my kids are in Australia, Dubai and America, in each of those areas. And suddenly this getting older piece has got quite a lot more complicated.
It's quite bewildering, I think.
If you're then factoring in divorce or big sums of money, or going through a financial consequence, which maybe has, caused some massive financial disturbance or disruption.
And then with COVID, there's more divorces. So there's probably people that realise they didn't really like their partners. And they've been locked indoors.
That's like Christmas. Everyone's divorced after Christmas and the summer holidays.
It's the highest demographic now, isn't
must
it?
be making a fortune.
I think the over 60s now are the highest area of divorce, which is astounding, isn't it?
I know.
It's crazy, isn't it? People have been together for that long, and for whatever reason they've decided, like, go
their
always
separate ways.
I think maybe I know, because I see this in my 40s. There are couples who stay together because financially
it's
they
the right
can't
thing.
quite
Yeah.
separate. Maybe they've got expensive private school fees. They can't afford to run two houses. And so there gets to a timing when they're saying, actually, the kids have left home.
Yeah,
we kind of can do this now. And I think attitudes are changing. We're living a lot longer. We want more from our retirement.
And you want more from life, don't you?
We want more from life.
We've done some divorce cases in the lending the equity release and like the lifetime finance piece for clients that are getting divorced at 85.
Oh, wow.
And you think, was it
That's
that
bad
bad?
inheritance tax.
I was going to say, is that good?
Like, how long have you got left?
To be fair, I've got clients who are trying to get remarried for inheritance tax.
But you just go. I guess people, 40 is the new 50, isn't it? 30
Yeah.
all these kind of sayings, but people are really taking stock around their decisions and what that means. And hopefully that education piece that we provide is, making a small decision now can have such a big consequence later. And in that, you're looking at protection, pension planning.
Yeah.
And I think through these tools that you use, particularly like cash flow modeling,
Yeah.
you can bring these things alive.
Yeah.
You can. It's amazing what's out there now, isn't it? Showing customers visually what can happen.
Yeah.
They don't think about what happens when life happens and the impact on what they've got or what they haven't got, do they? They don't appreciate
And
that.
they don't understand the language. Like sometimes we talk about it and you go, I really haven't got a clue what that means. Whereas visually, if they see it, they go, right, okay, that makes sense. Give me a scenario.
I find most people are visual.
Yeah.
And they love a picture.
Yes.
And I guess to the advisors who are listening to this, I don't think you can beat actually doing your cash flow model with the client. So, one of the things I do is we play around. I call it, let's play around with your model. Let's look at what that looks like. If this happens, if that happens. And I can't probably say enough what the value of being good at actually being able to do that.
Okay.
Because it's so powerful. Again, sitting next to a client saying, what if?
Yeah.
If you do that as well, do you find that, okay, if we play around with this scenario and your impact on your pension pot is X, can you visually see them sort of hitting home? Hadn't thought of that.
And that's both ways.
Yeah. Okay.
Both ways, we know there's a huge, huge pension gap in the UK. A lot of people are living for today, and I totally understand that. But it's understanding that they need to balance that as well, because we know there's going to be a lot of people who are going to have quite difficult retirements or going to have to work a long time. I think what's really powerful as well is showing people that actually maybe you can look at your job in a different way. Maybe you can part retire at 55 and you can consult for how many years and what that looks like. Because the longer that you work for and keep putting money into your savings, retirement savings, etc., and don't start to draw down that income.
Yeah.
I get excited every time over my model.
I mean, the thing that I see with that,
it's just so, I'm a bit of a geek, but it's so powerful. I'd be like, oh, look, you've gone from your money running out at 83 to 95.
Yeah.
And then we build in this fun time as well. So we'll build in what I call the luxury spend. So I'm like, what about if you work a little bit longer, but we can build in an extra 10 grand on holidays from 55 to 65? Can you work that into your working life?
I think we talk about that a lot with, like when I see people, whether kind of at the extreme of asset rich and maybe income restricted, income poor, not necessarily the right word, but I think we've got this weird thing as Brits where we're like, well, that's my house and that's my pension and never the two shall meet.
Compartmentalised.
And you're like,
Usually.
and I say to people like, well, let's just pretend that you're not living in a £1.2 million house or £1.5 million. Let's pretend you were living in a £600,000 house all of a sudden, and there was £600,000 of cash on the table. How would you feel about your wealth position? Well, we'd be rich, wouldn't we? Well, you are rich.
You are, yes.
So let's just make some decisions now and then plug Liz into this model, and they go, I don't know what the colours are, but red goes to green pretty quickly. And they go, all right, like the proceeds of the family home are tax free if we sell it. We can do stuff with that money. We can perhaps give an early inheritance, create these memory dividends from doing these things. And I think so much of this just goes back to like this educating clients, sitting with them about emotions.
Do you think clients are afraid? Do you think some people are afraid to go because they think, oh, it's going to cost me a fortune and I won't understand what they're talking about, and I'll really, when we just put our head in the sand. So could there be a lot of that where we need to educate them that's the right thing to do?
Because in the UK, we are taught from a young age that you buy a house, you effectively try and keep going up the ladder as long as you can, but you pay off your mortgage by the time you retire.
It's drilled into us, isn't it?
That is drilled onto us. So many people are doing that and putting nothing in their pensions and paying 45% tax and paying off their mortgage.
At 3%.
Every month.
2%.
Some people are paying off at like 1.8%. bad decisions here. There's some arbitrage. There's some arbitrage opportunities.
Listen, nothing increases your pension focus like dating a serious financial planner.
I was saying this is free advice for us.
I am like so boring with relationships.
Every Saturday night we're coming round.
Yeah, exactly. But yeah, we all are how we manage our money is how we're taught as a child, and it's very, very difficult to change your mindset.
Yeah.
So if you are taught to be frugal with money, even if you're very successful, it's still in the back of your mind.
LMG Apply is our new annuity application platform designed to save you time on every application. Sign digitally and avoid rekeying client details. Tap the link in the episode description and our team will reach out to help you get started.
I know what you mean. I remember having advisors come in, advised a long time ago now, and you have someone and they have a big amount of money in a deposit account, for example, and when you went through the sort of income and expenditure and all that type of thing, if, like you say, they were frugal, they literally, well, I don't want to spend any more than that because, like you say, it's drilled into them. They've just been like that time and time, and they just won't change, will they?
I don't think it's about trying to change those people, though. I think...
No.
Do you know what I mean? Because you're just not going to change them, are you? Like one of my biggest clients was a guy that... he lived in Sri Lanka, but he was raised as like the son of a missionary in Africa, and like he just refused to buy shoes that were more than £5. So every year he would come back from Sri Lanka, buy 6 pairs of shoes from Asda and for £30, and he was never going to change.
They lost him.
Yeah, and that was his journey. But he was really passionate about giving back to charity and relief and stuff. And I think finding those buttons and those levers with people is,
it's a beauty of it, isn't it? Everyone's different, aren't they?
Yeah.
Yeah.
And we should all spend our money in the way we want to spend our money as well.
You only have one life.
Exactly. But I think where you can just help people understand their different options. I'm a saver rather than a spender. And like Andy's
He's the opposite.
I'm not sure I'm the opposite.
No, you're not. But you will be like, Liz, just buy the shoes.
Like, we can't go out for lunch and dinner in the same day.
You work hard, buy the shoes. But yeah, you are very, you're often very set along your path of what you need to do. And I think in the UK, we need to kind of educate people about different options.
I mean, it's still mystifying that this education piece isn't in schooling properly, isn't it? Like everyone, I think everyone in our industry is really passionate about this. But, when I look back, like sewing a button on my shirt clearly was more important than learning about like cash flow management or like how money worked and
Not
stuff.
sure kids can do
I know he's got a home ec. My eldest, now he has a house. The other girl, she's saving, she wants to buy her house soon as. But the youngest, they all know about protection. They know the importance of it, and they preach it to their friends.
Oh wow!
And I'm going,
You've
my
done
God,
a good job.
I've done a good job. Yes, very good. I'm a single mum for years, so you don't need the men sometimes. Sorry, but to them, but that's what they say. We don't talk about it in school. They go into home ec and learn how to bake the apple crumble or something like that.
Wherever we go, Liz is like, you have to get mortgage referrals everywhere. We went to a kids' party the other day. There's a mortgage referral. I got my hair cut the other day. The guy's like, I need a mortgage. But I think mortgage is such an emotional part of the journey, whereas nobody cares really, no offence, but whether their pension is painted red, blue or white. Do you know what I mean? Whether it's a provider or another one. But the mortgage is attached to this emotional thing, isn't it? Like,
well, that's
I've
seen a house. I've seen a house, got a red door, got a lovely chimney, it's got a log burning stove. Whereas that's why I think the wealth piece or the financial planning piece often takes a lot longer, but it's still mystifying that those journeys rarely are very well combined. Mortgage advisors tend to focus on mortgage and protection. There's a lot to do.
Yes.
Financial planners, respectfully, don't often like mortgages. They're seen as this kind of like poor relation of that journey.
Some we don't touch. And it's all about the referrals. A lot of good mortgage and protection advisors really do need to, and a lot of them do. It's if you don't want to do it, refer it on. It's the right thing for the customer.
I agree with that. You often see in the financial advice world, people in their book is 98% pensions.
Yeah.
Or you get a really good guy who's brilliant at shareholder protection. But you really need to refer it to someone who is great in that space if you're not comfortable in doing it. And actually just say that to the client. Just say, I do this quite often. So I am much more focused on trust planning, tax planning, investment planning, but I do cover everything. I get a really complicated protection case, somebody who's had cancer, previous illnesses. I go to a high net worth protection specialist and I work with them and I explain to the client why. Because I say to them, it is vital you want this protection. We know you need it.
Yeah.
We need to make sure we can get that in place for you. And the best person is not necessarily me. And I think it's okay to hold your hands up and just say, I need someone who does this every day.
But it's like we were talking about the house, and that's important. You're not going to get the plumber to do your electrics.
You're not.
You're not going to do it yourself and make a box job. But I think it's referrals. People, some advisors are afraid because they don't want to lose their client. Yeah. So it's offering
and
reassurance.
They feel like they can't put their hand up and say, actually, I'm not that good at this.
And
that's okay. That's okay.
But I also, and we talked about this in the car yesterday, I was like, nobody leans on people like you guys enough either, though, do they? You know, like bring in your experts. You guys are full of people that have got amazing qualifications, amazing industry experience, amazing case studies. Like the depth of what you see is much greater than what we see because of your vision over this stuff.
We do it all the time. If we go into new advisors of big firms, you know, SJP, you know, MAB, we'd say, right, we're going to bring our claims specialists in, we're going to bring the underwriters in, because we'll have a little bit of knowledge, but we're not going to sell our claims or underwriting service
when
team.
you come in, the inquiries go, whoop, don't they? Because everyone's like, oh, I've got that case.
Yeah, it's top of their mind, isn't it? Suddenly they're thinking about it. We bring people in. You're right. We might bring a claims director in, underwriting directors, what other people. We've got our market development team that go out and do training all over the country.
But then those firms feel that we really listened and that we understand their business. And that's like your customers, because then they think, well, they understand me. They're being honest with me. So they're referring their best people then to look at the different elements of their...
And that goes back to, you know, how to build a good business. And really, if you look after your clients well, that should, in theory, do its job, shouldn't it?
Yeah, and then you'll get their children's. It's a generation thing, isn't it?
Basically.
It's an acknowledgement, isn't it, of the whole offering that you're providing and the benefits of that, and not being afraid to say, look, okay, I want to make sure that I'm doing this right for you. So what I'm going to do is I'm going to get an expert in this particular area. So, for example, high net worth protection and stuff, and we're going to do it properly. And I like the way you described that. You were basically giving the benefits to the customer of doing it, weren't you? Like, the reason we're doing it is this, and this. You know, I wouldn't want to get it wrong either. I want to make sure we've got it right for you in terms of your ongoing plan going forward.
Exactly. So I think if you focus on the strategy the client needs, the solutions just fall out. And if you are not the person to facilitate the solutions, have that network. So you've got the best people in your network to go and do that. It's really interesting because before we met, I really didn't understand later life lending. Because I deal with so many high net worth clients, a lot of them business owners. If I would be like, well, you kind of don't need a mortgage now. You're kind of too old. You don't have the income requirements. And just sometimes understanding the solutions out there, even if you're not going to facilitate them, is so important. Because now I really can see the opportunities and be able to talk to clients about it. And it might not be an opportunity they want now. It might be something for the future. So I can build in that as part of their strategy.
Well, the landscape has changed as well, hasn't it? It's good that you have that connection in terms of those the referrals that you're doing between yourselves, because we know what's coming in sort of next year and stuff, don't we? Because of the IHT piece.
Absolutely.
And then that makes later life lending even more important as a potential solution. Not obviously right for everyone, but it's real importance to take a step back and look at the whole picture, isn't it? Because, you know, we know that pensions are going to be taken in from an estate planning point of view and IHT point of view. That type of thing. Surely you must have seen maybe more inquiries or more potential solutions from your point of view.
The regulation piece is probably one that we've left out of this so far. But, you know, you're like, your kids want their money and you want your money, and you talk about it as net cash flow. But, you know, the HMRC wants their money too, right? Their $8 billion in IHT provisions that they're taking in. And I don't know, people are always so against this concept of IHT. And like, I don't think anyone here is here to defend it or promote it. But it's pretty easy to mitigate a lot of that inheritance tax, particularly for clients where I think their values are, I don't know, 1 to 5 million. Maybe you step in on this a bit more. But, you know, if you've got 50 million, that's a slightly different scenario, right?
Yeah.
You've got some dynasty planning or you've got some serious work to do. But,
start a bit earlier.
you know, if you've just got a high value estate, you can create some debt, you can give away some money, you can buy a whole of life policy, you can spend out of income. I mean, probably missing some bits here, but... You know, just do some planning, talk to some people, and this idea that it's unfair, but you've done nothing about it.
But it's quite hard to just do in one go. So this is why you need to take them on the journey.
Yeah.
Because you've got to show them that this is going to have to be done over the next 10 or 20 years.
It's not a quick fix.
What I find with some advisors is they have it in their mind that the client's too young to start doing inheritance tax planning.
Yeah.
So this is probably quite relevant as well to large divorces. So if someone gets divorced in their 40s and they get quite a large amount of money, we should be discussing inheritance tax planning even in our 40s with them. Because if we've got the modelling right, we should know what their wealth is going to look like. We should know their expenditure. We should know their proper planning. Yeah. So, I took a client from a very high-level private bank a few years ago. He was in his late 40s. He'd sold a business and he said, I cannot believe the solutions you've come up with because I was told by this bank that I was far too young to do inheritance tax planning. Now, you can only give away $325,000 into a discretionary trust over 7 years. So if you're a wealthy individual, it's going to take some time, isn't it? If you're just going to do that later on in life. So you need to plan early. And I think that's quite relevant in divorce. There's so many aspects there. Yeah. There's what I call the net cash flow, the cash flow they're going to need in their lifetime. But what about transferring that wealth on? What about the inheritance tax planning as well? So there's so many aspects we need to bring in.
You must feel like, I wish I met you earlier in some cases, in terms of how you're helping them and that journey they've got to go.
So, yeah. And what I love about running my own business and why I left working for an institution is that I say to my clients, I'm going to be here with you on this journey.
Yeah,
they say to me, are you going to retire? And I'm like, well, no, because I actually love what I do. And I think we talk about this, I really miss it.
Andrew's shocked. He didn't know you weren't going to retire.
I don't think I will because my clients are my friends as well.
Yeah.
And I really care about them and their families. Okay, maybe in retirement I might do quite a little bit less, but you always want to be there as that sounding board.
I think, and like not to dwell on that too much, but I do think, the regulator needs to kind of look at this at some point and look at, I think the qualifications are still a little bit fragmented. There's not necessarily like a holistic retirement qualification. I think when I look at like equity release, for example, you've got people doing that advice, but they're not qualified to look at inheritance tax or pensions. And like, how can you not factor in those things which are clearly relevant? Pre-75, post-75, have you taken the tax-free cash? If you're not, do you have whole of life? Is your protection written into a trust? And I don't think the regulator's doing a bad job by any means, but I do think that everything always needs this kind of uprating and updating.
Yeah. We feel like everything is a little bit in silo. Yeah. So you've got therefore that person giving this equity release advice, but they're not necessarily recommending a financial planner to review their inheritance tax planning. Yeah. But then also we can't use equity release, particularly as a solution for inheritance tax planning. And it needs to be looked at as a whole. Yeah.
But also, like, what's the impact on long-term care? This kind of elephant in the room that, is enormously expensive. £1,000, £2,000 a week is not unheard of. And how do you even plan for something that you don't know is going to happen? Yeah. Like, you know death is going to happen, but you don't necessarily know illness is going to happen or dementia or this adaptation of your world. And I think that in itself is just a whole new conversation.
We know so much of people's house values. This going in like 5 years in care.
We know like a couple of people in work that are saying like they're paying now from all the inheritance that was going to be, they're selling the family home and they're paying $2,000 a week.
$100,000 a year net. Often.
I know. It was like, oh my goodness, it's scary.
Wrong,
it's
really,
wrong.
Isn't it?
And you sometimes you nearly are glad that maybe the parents don't understand if it's dementia and stuff, because if they knew that they're all
so upset,
they'd be so upset.
Well, we were with some friends last night and they were talking about a book they're reading called Die with Zero. So maybe we all need to just read that.
It's interesting that they talk about these few concepts like these memory dividends. They talk about, we're big on holidays and getting the kids away and doing stuff. And I think those things are so important. They're the things your kids remember, aren't they? Like they don't necessarily remember the bits and the bobs during the week, but you talk about the trips that they remember. And like, do you remember when we're going all inclusive to Greece on Thursday? And they're like, Liz is dreading it. But the kids are like, did you know everything's free on holiday? And you're like, it's not quite free. Like it's prepaid.
Mommy and daddy are paying.
Yeah, exactly. No, isn't it?
It's prepaid, but it's not free. So they're like, it's free. But, these are the things that they will remember for so long.
And I think going back to, divorce, financially, it's such a traumatic time, and it can go on for a long time as well. You know, if you end up in a court battle or something, it could be years out of your life. And I think at the expense, and I think, you know, just what we were saying there, the kids can really miss out for a few years there. And so sitting with an advisor and trying to work out how you're going to get through this, what options have you got? Just, I call it short, medium and long-term planning. Short-term planning might be getting through that divorce, getting to the stage where, you know, you're either been able to stay in the home, get a new house. Your kids can't miss out for those years.
No, I know.
Because people might not be in the headspace to deal with certain things. I can see why you're doing short, medium and long term. Short term is get through this initial bit because emotionally I can't deal with it.
And make sure the policies are correct at the time, cover school fees, cover holidays of the kids. If
your cash flow's right, you know where you're up to.
Like you're on an even keel just to try and deal with it. An interesting one, just to take it back, you mentioned earlier around older people obviously divorcing, sometimes leaving it to when the kids are a little bit older. Do you feel if they're doing that, well, you might not better sort of apply a broad brush with it, but do you find that if they do it when the kids are older, is it easier on the kids or not? Or is it still
I think the kids
just
are
as
always
bad,
like, there's all this crazy thing, isn't there, where the parents are obsessed with like leaving the family home, you know, like, you know, Joseph might want it, or like, you know, Frank might want to live in this family home. And then you speak to Frank or Joseph and they're like, I don't really want that house. I can't wait to sell it. But you've got these kind of misconceptions generationally, I think, and the way people approach the behaviour of money is so different.
But do you think people don't talk though?
No, they don't talk, because the kids would say, you should have divorced years ago.
Yes,
you know, like,
absolutely.
they've never liked each other.
I know.
And I think there is a bit of, you know, the generation maybe that we're in, and
we're probably
randomly
better.
I spoke to someone else about this the other day, but I think people that are in their 20s and 30s, you know, sometimes they're finding it difficult to have children with a life partner at the moment, because it's so easy to be like, well, that's not the right person. And I don't know how to articulate this particularly well, but you've got to kind of go through that grit. And when you speak to older people that their children is going through this divorce, I think often they're disappointed.
Yes.
You know, they're like, have you worked at this?
I know.
You've given up.
To have
Have
good
you went
times,
to
you need bad
counselling?
times.
But there's a focus on making sure that you're in the right headspace, doing stuff for yourself, making sure that you're on even keel, all of these types of things nowadays. And does that mean the pendulum has swung more towards that than rather, like you say, putting a shift in and just checking can we make this
I think people
work?
have changed their mind. I think they think, we have one life.
Yeah.
I'm going to live it.
There's so much more.
But also,
And
you ask
women and
anyone
men are
that's
more
got those-
financially even than they were to some extent.
Yeah.
Well,
To
it's
some
getting
extent.
better.
It's getting better. So more women have choices to say, actually, I don't need to put up with a life I
But
don't
it plays
want.
into, I think, the divorce bit of like when I got divorced, it was kind of instigated by one side, but it was totally like two people that were ready to part.
Yeah.
You know, and like, you know, we'd had our journey and our children, and I wished her well and she wished me well. And like, I think most people, they got divorced. You know, someone chose to divorce the other partner. So I think it's 90% of marriages end in some level of like infidelity and all of a sudden that's going to create like a massive amount of friction, isn't it? So if it's generally the man that's done that, and if we're generalizing, it's probably the man that, not always, careful, has probably been slightly more dominant in looking after the finances, potentially. Potentially he's earning more money because he's not been off work due to that children's journey. So he's got quite a lot of dominance and power and control in that.
And then we get into the economic abuse piece as well, don't we?
And the coercion and everything.
And it's all about then that person dictating, am I going to change that policy? Am I going to approve the cancellation?
It's a lot to do with financial coercive control.
And
you know this.
they go, Andrew, I've never set up a direct debit. I don't know how banking works. And you think, kind of in your head, you're like, wow. But then you're like, well, why would you? You know, a bit like if you'd been, I think we talk about divorce a lot, but also people get widowed quite abruptly and the consequences are probably as equally as harrowing. Maybe it's easier being widowed. You've not kind of been cheated on or something's happened. But I think there's a going back to the beginning piece, regardless of what age they are. And that's part of our journey and our job with them in terms of what that looks like.
I mean, I'm quite passionate on, I guess, getting advisors or thinking about advisors really trying to educate their female clients. So very much, I mean, I've been in financial services since I was 21. I've been a single parent. I've financially bring up my children on my own after a very acrimonious divorce, not amicable. My children's father and husband abandoned us financially. I mean, so my children have a very different perspective, and my daughter has a very different perspective than some girls would. But it's very interesting for me, having managed my own money for 25 years, and obviously always working, to see how many females out there still very much, even when they are perhaps got their own careers, rely on the husband to control everything financially. And then there's still a lot of ladies I know who perhaps work part-time or, don't work at all. And let's face it, I think still a lot of the childcare does fall more on females than men. They have more time out of the workplace to have children. We know their pensions are significantly lower because they're not having those contributions early on. And we know it's your 20s and 30s when you make the contributions that makes all the difference because of the compounding wealth. So women still, we have not caught up. And I think there's a massive education piece to educate younger women about taking control and being confident with their money and their investments. We also know that women are not confident to invest because the psychology often is that unless we understand something, we're not sure about doing it.
Yeah.
We're not as gung-ho as females, I think, as men in the investment space.
Have you tried the new and improved Ignite? 4 tools, 1 platform, 0 stress. Ignite combines the power of 4 tools. Criteria, affordability, product and property in one easy-to-use platform, giving you everything you need to research and compare for the best mortgage options. Ignite's data is updated directly by lenders in real time, so you can stay ahead with confidence in a fast-moving market. To see the power of 4 in action, click the link below to book a demo.
You're right. We've talked about this before. In that we have to know the detail. Women are more likely to want to know the detail to actually make the leap.
And they're more likely, we've done this with business protection, there's more female business owners that once they're spoken to will take protection than men, but they're less likely to be spoken to.
Yeah, it's so interesting.
Or they get, someone comes along and throws a load of jargon at them and think, oh, I'm busy, I'll look at that next year. It's they need the time to understand it before they commit. When they commit, they're committed. So I think there's a massive educational piece still in the UK. I think we should be educating younger females towards taking control.
But I'm just thinking bigger picture. How do we address that then? Because obviously we will have the children, you can't do everything. So there will always be that.
I think there are countries that do it better, don't they? Like Scandinavia are particularly good at this kind of stuff. And even sharing like parental leave and who takes time off and everything else. And like, can you reset something that's been ingrained for so long? Yeah. But I think, again, it's that school piece, isn't it?
It is. It's all going back to the...
We're lucky, my dad ran his own business and your dad was a lawyer, tax accountant. And you've kind of at least been brought up around what these things are and the consequences
you understand the language
money.
And you know that.
But most people haven't had that, so they're learning at a much later age, and by the time you've got this muscle memory which needs changing, it's really difficult.
And I think if you're brought up in a household where the father controls the money, the mum stays at home, maybe you think that's normal. And so
I think if they've stayed together, I guess.
Yeah, exactly. I mean, my daughter goes to a very academic school, and they're girls who are being brought up, I guess, to some extent by the school to go off and forge great careers for themselves. But my daughter very much sees that probably half the mums don't work and half the mums have no idea about the finances. And the girls at 14 start to think, what's that about? How come mum doesn't have any idea what dad earns and, how much the mortgage is on the house? And it seems quite antiquated. And I think we need to teach our girls to question in schools.
I think that might be a wee project for you because we were talking about going into schools and doing,
absolutely.
Not enough of it, is there?
Not any of it, I don't think.
Yeah.
I mean, I talk about this as a really kind of quick side point, but if we started a job the same day, same age, same institution, and you get your kind of, where's the fire exit, where do you eat, where's the toilet, and then you get your pension forms, your next of kin forms, don't you? And you're stressed already, you're anxious, but I've come in and I've got there early and you've missed the bus or whatever else, or vice versa. And you just tick cautious on your pension form and I just tick aggressive.
Yeah.
But for 30 years, we make the same contributions out of the same
Got
salary
such a point there.
in the same place. I'm probably retiring on triple, quadruple for 30 years. But no one's saying, well, have you thought that even at 25, you can't even sniff this money till you're 58?
50,
not even thinking about it.
I mean, they do try to lifestyle with the pensions now. So they try to put the younger people in a high risk and then lifestyle down. But, I was just looking at a pension recently for a client and she's been in 30% cash for the last 10 years. And the reason is because no one really had a conversation with said to her is, one, you haven't retired till you're 74 because you love your job and you don't need to.
Yeah.
So, again, that was a lady she's a career lady, but she's probably kind of just left that pension alone, thinking someone is dealing with this for her.
Don't.
We need to be educating
It's just
our
a
girls
form,
at a
like you
younger
say,
age.
there's nothing around it, is there, to say, right, it's really important that you really think about this.
But even if you just had what this could look like on that form, but you don't.
An example.
Yeah.
Or this can be reviewed later.
I said my daughter, she's just joined the fire service and she got, obviously they get really brilliant pension, but she's already looking through and her pay slips, look how much money I've had taken off me this month. And I went, just go and do a calculation of what you'll be getting when you hit. And then she's going on and look, it's now 1 point such million and it's this. But I find it fascinating that they'll do that. Some of them will do it. They need to understand, yes, that's coming out, but what that means in the future.
And I think young people really do need to be educated so much more. I mean, there's a lot in the press, isn't there, at the moment about university costs?
Yeah.
Student
and
loans.
Is it worth going to uni or going into trade?
Is it worth going to university? For people getting divorced, we know a lot of people need to support their children through those education costs as well because they're coming out with a lot of debt. That's another thing that weighs heavy on people, isn't it?
I think what's interesting with that is that last night we went out with your best friend from university. Liz went to Oxford with her best friend Emily went to Oxford. So I wouldn't use names, and her partner went to Cambridge.
Yeah,
and they're all, I wouldn't say anti-university, but they're very much like questioning the value. Fair enough if you want to be a doctor or a vet.
Yeah,
respectfully, these are like the highest academics that have come through these red brick universities, and they're going, I'm just not sure it's worth it for our children. And I was quite shocked, wasn't I? I was like, I thought you would all just be so pro these institutions, but even you with your kids are like, there's so much stuff else they can do. Even if you look at what they could do as a financial planner, you can be qualified in 2 years, earning a ton of money. Same qualifications you'd get if you came out of university or a different way of learning.
But I think it's us as parents too, because Tierna is in the fire service, but she said, I said to her, you have to go to uni. She went to uni, always wanting to be in the fire service, done her business studies degree, qualified, and then went to apply for the fire service.
She's like, Mama told you so.
I told you so. And she says, I have now 25 grand in debt just because I have a degree that I didn't need for the fire service. And I didn't go to uni. I was in a relationship at that time and it was like, bought my first house when I was 18 and it was a bit of that, young relationship where you were so naive and you just done what you were told. But the life lessons that I got, from being retail into management, then going into financial services, and you can end up what you can be whatever you want to be. And university, as you say, is not the be on end up unless you wanted to be.
And I think for parents, we are now feeling the pressure financially for our children.
Yeah.
So, you think about two people who want to get divorced. There's a lot of financial pressure there. We now need to find 2 homes for each other, and we at 2 lots of bills. We need 2 lots of income. We also know we've got financial pressures for our children. Maybe before, 30, 40 years ago, your children would get a job, they would go off to university, it was relatively cheap. You kind of could say, I've done my bit now at 18.
But there's upward pressure to parents as well, isn't there? They're in care and they've got needs.
Yeah, they've got the parents' side, and then we've got university fees. How are you going to get how are the kids going to get on the property ladder without some help?
I think the average first time buy now is 34, 35.
Yeah, I think it's
average age of leaving home is 28. It's whatever it is, it's creeping up and up and up.
Yeah, definitely.
House prices in Northern Ireland are so much cheaper. I feel sorry for anyone that lives in the UK. Honestly, I don't know how anyone's supposed to afford a house.
It's ridiculous.
It is.
It's terrible.
I think we're seeing that kind of crazy lending piece come back there. We can get 8-9 times earnings again now on the lending side. I think there's a mortgage lender, 103%.
I remember there was 125.
Mortgages, and you just think this is starting to smell a little bit kind of toxic where this is going. But you're stretching 2 household earnings or incomes to get most people's mortgages in terms of what they need. And it's not the wrong thing to do that if you can weather the storm, but if something happens to one of them or they get divorced, and like the ramifications of that are, especially in expensive areas, like we live in Cheshire, and you're not buying a house separately in the same area, are you, with one of those incomes?
No, people are going to have to hold mortgage debt for a lot longer. And I think the lenders are really aware of that.
They are, and I think the evolution of lending in that over 50 space probably has been the most evolution or revolution that we've seen at all. Legal and General are clearly involved in that space. But it where I find it interesting is this transition of wealth, to bring it all back to this, from a business perspective. It's all of the money is in bricks and mortar, 3 to 5 trillion pounds in over 50s housing equity in the UK. That's coming down the line, isn't it, to children and grandchildren? And, I guess we want to be part of that journey from a commercial perspective, but you can really help along the way on that emotional side with people as well. And that's where we're at.
And the piece about pensions, the other, if it's not in bricks and mortar, it's in pensions.
Yeah.
Next April, it's such a changed landscape with bringing that IHT-able, because that's pushing a lot of people as well over the £1 million. I say £1 million for a couple where they've got an IHT liability. That pension has to be spent that before it could have been left. And so there's so much more planning needs to be done around that. Some little pieces that we're doing is clients taking money out of their pension. They're going to be taking an income out of their pension, and they're going to be gifting it to their kids to put in their pension. So because their kids are saying, I've got a mortgage payment, I've got all these bills, I want to take the kids on some nice holidays. I haven't got any money to put in my pension. So how do we be smart as financial advisors to transfer that wealth? And we're going to have to change that generation's mindset. Yeah,
there's a lot of mindset about it because they've had a certain way, like we talked about earlier, they've been brought up.
Yeah.
And particularly from a pension point of view, to support myself in retirement and preserve the pot value and all of that. Now, I suppose advisors helping people to look at it in a slightly different way.
Exactly.
Bearing in mind what's happening.
But it's not even it's not even been introduced as like a sort of a tiered impact, is it? It's like one day it's not IHT-able, the next day it is. And whether that's right or wrong, but you will have clients that have probably spent 30 years building a family asset. How big are some of the pensions you've seen?
I've got a client who's 90 and he's got a £1.5 million pension pot.
What can he do?
And he said to me, the only thing I could do is die the day before. Oh, God. It's awful, isn't it? I just think it's awful. There's no transition.
Yeah.
There's no planning he can do. He can't get that kind of money out in any way.
He can't insure against it.
He can't insure
against it.
That's it. That one was... If anyone's got any ideas, please let me know.
Yes, I was going to say.
I'm not sure the FCA likes any of the ideas.
But I think that, we talk about this, 8% of the UK roughly receives financial planning advice. I think Australia's the highest, about 25, America's in between. If 1 in 8 people are getting advice, but 1 in 8 people are going to live to 100 soon, and 1 in 8 people are in an IHT position, there's never been a better time to be a practitioner. These rules, these changes, the workforce in financial services is aging. I think there's more people retiring. They can't keep up with the demands of the regulation changes, the changes in terms of the education requirements, the qualifications, and it's a great time to be an advisor. It's stressful, it's complicated, it can be high pressure, there's client demands, but you can do a job and earn really good money, but you can also be part of something where you're changing a lot of people's lives. You're having an impact, a deep reach in terms of the generation that you're helping, the next one, the next one. And you talk about this, don't you? Like, actions now can live for 5 generations. What a feeling that is for these people that have created some wealth.
I actually got a wee shiver there. That is mad to think that what happens now can have such an impact.
That emotive connection, as we kicked off with, I think, when we were talking earlier on there, Liz, you have with your clients, both of you, in terms of getting that connection and helping them along the way. All the things that you've talked about today are probably one of the biggest promos I've seen for taking financial advice and maybe going into the financial planning.
I'm going to get Liz's number before
arena is absolutely unbelievable. And also the unique way you work in terms of referring, making sure that you're bringing each other in as experts in a particular area and taking that step back to make sure that the ultimate outcome for the customer on that journey is the right thing. Now, obviously, we're going to have listeners on here that are either in financial planning, thinking getting into it. Could you share from both of you, actually, one sort of key takeaway that you could give to someone either in the industry now or thinking of joining the industry? Perhaps we'll start with...
Let me take the one
yourself.
Joining, because I think I see probably more people, like in terms of volume of people, and I think you'll be better with the ones that are in it. But I think everybody should, if they're going to get into financial services, I think mortgages and protection are such a good way of entering into that world.
Agree.
I think people are more passionate about housing. It's probably the bit that's come slightly before the pension, might get shot down a bit by that. But we talked about this with your son, who's 17, and I'm saying, look, instead of him getting a bar job, why doesn't he get his mortgage qualifications? You know, I can help him. He can come and sit with us. He can learn this stuff. But I started as this mortgage and protection advisor, and I had an interest in financial planning, so I got into it. But I think it really does take you into a journey which you can understand quite simply, and then you can really add to that as it develops further. Yeah. And I just think that's a really good way of getting into financial services. And the barriers of entry are
it's
a
a good
lower.
foundation, and it can open, because that's what I started, mortgage and protection advisor.
But you know,
and then
all your friends want a mortgage, don't they?
Yeah, and it's a great way, that's what I was saying, anybody in their 20s, once they get into that, they're going to get the referrals from all their friends.
You'll be helping everyone. They'll tell each other, won't they? Because they do.
And they'll be in the pub telling their mates.
Exactly. You know, a pension isn't not far off an annuity. Yeah. You know, every 2 years or every 5 years, you are revisiting a client. You're doing more work. You're getting paid again or remunerated again. Financial planning books, you get an annual remuneration for making sure you visit that client and give your advice on an ongoing basis. But mortgages are not that different to that. You can build a really good business, whether it's just a lifestyle business.
And they should be reviewing annually.
You know, businesses that we deal with, fantastic businesses out there throughout the UK. So a great bit of advice there in terms of getting into the industry. So for those already in the industry, then Liz, what advice have you got?
So I'm really passionate about, I guess, constantly increasing your knowledge. So firstly, if you're actually honest with yourself, if you're listening and you mainly just do pensions or you mainly just do one thing, actually try and just educate yourself. There is so much, like listening to this, there is so much information out there. There's so many webinars, there's so much CPD you can do. The best way I've learned is sitting with other professionals. So, you know, if there's someone in your team who's really good at, I don't know, inheritance tax planning, just ask them if you can go on some meetings with them, because you learn from other practitioners. So that's the first thing I would say, is just get better, educate yourself, get more experience. We all need to talk to clients about other clients, case studies. So you need some of those things under your belt, especially I think as a younger advisor with less experience. The other thing I'd probably just bring up that we haven't touched on is, where's the world going of financial advice with AI?
The
elephant in the room.
How did we forget about it?
How do we forget that? And I say that because there is a lot of concern that, you know, these AI is coming out and it's going to take away our jobs. I'm really passionate that it's not. I use AI quite efficiently, I would say, as a tool in my business. And what this is enabling me is to reach more people and to be better at my job. So, you know, with clients' agreement, I record all my meetings. We have an AI that creates letters, review letters. My review letters are so much better than they used to be. And I know so much more about my clients because I've remembered everything, because I can scan through last year's notes. So suddenly I'm becoming a better advisor through AI. I can reach more people, but AI will never take away the personal human touch. The emotional touch. I've had some clients recently in meetings on ChatGPT checking stuff. Either it's wrong, or what I say is ChatGPT will give you the facts, but what it won't do is help you make the decisions. So I think AI you should see as a tool, see as a positive, and actually just know that it enables you to reach more people, and you're going to drive more business from it.
And it won't put its arm around your clients like you would do.
It won't become their friend.
And
I said this before with L&G when I did some stuff with them, and it's like, you know, you want to put pension changes into Google and sift through 10 million results. Like, you go for it. If you've got time to do that, good luck to you. But, you know, most people, it just creates more or lack of understanding or more confusion.
Absolutely.
And I
too
think,
many facts.
That's the first thing we say to clients is go onto the regulator's website, have a look at who we are. You know, we have been deemed fit and proper to speak to you. You know, are there going to be people that slip through that net? Probably not anymore. You know, the checks and the vigorous kind of diligence that's done on people and institutions and networks is significant. And if all that does is give you the confidence to at least speak to one person or more than one, you're in a good place. You know, the regulator's done a good job, I think, of weeding out like bad apples and people that are not giving regulated advice.
Totally.
But I think the AI thing is embrace it, but the advisor thing is just don't be afraid of the journey. You know, it's really interesting. It changes constantly. You can facilitate a business around your lifestyle. You can facilitate a lifestyle around your business. You get to work with some amazing professionals, and I think our industry is really exciting to be in.
It is a great industry.
And the equality, like years ago, it was very male dominated, and now it's not. You know, there's so many more women and more females, and everybody feels quite comfortable. You know, it's a brilliant industry to be in.
Definitely.
It is.
Right.
Well, all that remains to say is thank you so much for coming. That has been a fantastic episode.
Thanks
for having us. Looking forward to this one going out. So
I'm
thank you.
disappointed we didn't get a margarita though.
Next time.
Next time, we'll do it at 5 p.m. next week.
Thanks very much.
No problem.
Thanks,
Thank you.
guys. Thank you.